Wednesday, January 28th. This is a new episode of All in Society. We're going to break down Meta's earnings today. We'll probably talk about Microsoft as well, possibly Tesla. We'll break down the top 5 biggest stories in the market, and we'll just go over some of our favorite investments right now in the early part of 2026. All right. Good evening, guys. Another episode of All in Society. All right. So let's get right to it. Let's go to Meta's earnings and then we'll look at the charts after this. I'm getting this information from Google Gemini after the earnings report, and then they also had a call today. I think it was around 4:30 Eastern was Meta's earnings call. This is on Google Gemini. I listened to the call, but I was at the gym, so I was kind of half listening to the things that they were saying. But after glancing over this, I'm pretty sure this kind of hit on some of the major points that kind of got my eyebrows higher and excited for what Meta is going to do for 2026. So let's get to it. So shares were actually up 10% after hours at one point, approximately $741, as a company effectively silenced, quote, spending skeptics with a massive double beat. Double beat means they beat on the top line and bottom line, on earnings and profits and revenue. We can just take a quick look at Meta right now, see where the shares are trading currently. So it looks like, that was weird. Okay, we're right around $720 mark, and it's up just under 8%. So not bad. It peaked around 740, 10% in after hours. So they'll probably have some momentum heading into tomorrow. Be mindful, the all-time high is $796.25. So it's a pretty big jump today. All right, let's go back to the research. So we look at the numbers, get the breakdown. Revenue was $59.89 billion versus $58.45 billion expected, and that is a 24% year-over-year increase. Awesome. Like to hear double digits, and in the twos or higher increase year-over-year. Earnings per share, $8.88, lucky numbers, 888. Versus 822 expected, and another 8, an 8% beat on the bottom line. Well, it would be nice if it was double digits, but I'll take that. Guidance. Now, they think this is really the reason why shares popped over in after hours, was the Q1 guidance for 2026. So forecasted 53.5 billion to 56.5 billion, which is significantly higher than the 51.4 billion that some of the analysts were expecting for Q1 guidance for 2026. And the DAPs, which is the family daily active people. I'm not sure where they got this family from, which is what DAP, daily active people, is 3.58 billion, which is up 7% year over year. Maybe family is the family of their apps, all of their apps, your Threads, your Facebook, and your WhatsApp. I'm not sure. Spending shock. Meta is leaning harder into AI arms race. So for 2026, they are forecasting total expenses between 162 billion and 169 billion. Now that is quite high, with capital expenditures projected to be at a staggering 115 billion to 135 billion. The market initially wobbled at these numbers, but ultimately cheered because the revenue growth is actually keeping pace with the spending. So it's a good thing. Are they going back in spending? No. But the revenue that they have coming in. Yes, they don't have the cloud businesses like your Microsoft or your Googles or your Amazon, but their other businesses, in order for them to generate revenue and profits, is allowing them to continue to invest and have these large capital expenditure numbers, because their growth rate, the revenue growth rate, is keeping pace with the spending. So that was awesome. That was another catalyst that probably pushed those shares to 10% or higher in after hours. And then Mark Zuckerberg spoke for a little bit. It says Zuckerberg's his tone on the call was one of aggressive confidence, and he had three major pillars. One was personal superintelligence. So Zuckerberg stated that Meta is no longer just building chatbots; they are building a superintelligence that will integrate across every app and wearable. And this is probably from all of that aggressive hiring that he was doing the past 6 months or so, to building this super team in order to have the best, kind of what back then was the best chatbot. But as you can see now, they're moving past just the chatbots and they're building a super intelligence. And then oh man, I can't remember off the top of my head. They just acquired this company that was going to allow them to probably do this with the agents, the AI agents. So that is probably what that company, reason why they purchased that company. That's going to allow them to really flip the switch and really work on the super intelligence. I believe that company was profitable and was doing very well, so we'll be able to integrate into their business pretty quickly. I'm not sure if the deal is actually done and sealed, but as far as I remember reading and researching, it sounds like things are good to go with that acquisition. Two, AI glass momentum. So Zuckerberg highlighted that AR glasses are now a primary, quote, data capture tool for their AI models, essentially moving beyond the phone. Okay, so if you're someone who like myself has, this is just the old version. I didn't get the new ones yet. But these Meta AI glasses, these are really going to be a tool that is going to move their business forward. He also said in the call that the sales for those glasses, those Meta Ray-Ban glasses, the other glasses they have 3x'd their sales. So obviously the glasses are something that consumers like, and that's great. I'm not sure if that means that they are, their profits are doing substantially well because their sales are three times. But I don't think they broke that down. If they did, I'll try to do a little bit of research and see what that's all about. But that was good information to hear. And then three, Llama 4 integration. Llama is their LLM, the large language model. Meta is already seeing a, quote, major AI acceleration, end quote, in ad targeting efficiency, which is directly responsible for a 6% increase in the average price per ad. And for when you go on Facebook or Threads, whatever the case may be, and they throw content in front of you, well, Meta's really good at understanding who you are. They have a lot of your data, and they can put things in front of you that they know that you like and want to interact with. And it says, Mark Zuckerberg said they're doing a lot better at this, and rolling out this year, they should get progressively better at doing such in the future. I think they've said in the future, you'll be able to roll out more targeted and more focused information. If you want to learn something, you can kind of open up your app and maybe interact with something, and it'd be able to help you learn whatever and research whatever it is that you're looking for. So I think Zuckerberg's really cooking. His team sounds like they are moving and they are grooving and they are building efficiently and quickly. So now at the point is we're just waiting for them to execute. He told us the plan. He told us what we would like to hear. Are they rolling back the spending? No, but their revenue that they're bringing in is allowing them to continue to spend in the likes of how they are. Just off the top of my head, it will be definitely interesting to see what Apple is up to. I thought about doing a play on earnings from Meta. but I already had a contract that was down quite a bit. So I was like, I'm not going to double down on that and add on to my losses. Let's just sit with what I already have. And this is options that I'm talking about. In my long term investing, Meta is my largest position out of all of my portfolios. So this pop was absolutely beautiful to see, and hopefully, team continues to execute. But this kind of shows you to do your research, lock in, and when you have a team that or a CEO and a team underneath that CEO that is as great as Mark is and his team, those are the companies you want to put your money behind. I made a post today. There's people that like to their favorite athletes like LeBron James in basketball, Patrick Mahomes in football. A lot of people like to bet sports and like to bet player props and spreads and parlays and stuff. Instead of investing in I don't really, it's gambling. Instead of gambling, you guys need to start doing your research. And those of you, I'm talking to people who are not, for people that rather gamble rather than, learn the stock market and learn how this can change your life. It's time for you to lock in, do your research, learn who the CEOs of the companies are of some of the businesses and companies that you use and interact with on a daily. Figure out what they do, their management skills. Just look back at the history, how they are for Mark Zuckerberg, see how he's running the business. This is one of the greatest businesses and companies ever. Why would you not want to put your money behind these folks? So for some of you that like gambling and things of that nature, maybe now is the time. This is your wake up call to kind of switch it up. You can bet on things and invest in things other than athletes. And I think a Mark Zuckerberg, a Jensen Huang, who is the CEO of NVIDIA, um, Apple CEO Tim Cook is probably going to be out the door within the next few years or so. But someone like that, those are the people you should be putting your money behind, especially if you're an iPhone user. If you're an iPhone user and you don't have any Apple stock, I'll just leave it on that. Let's go to the daily recap, and I'll stop my venting. All right, so let's talk about the top 5 stories of the day. So S&P 500 hit a new high today. It blasted through 7,000. I highly doubt it closed at 7,000. Yeah, typically when it hits that new all-time high, it's gonna fall back a little bit. So it's exactly what it did. It actually closed today essentially even. It was down 0.01%. So good to see it hitting a new all-time high. I don't think NASDAQ did today. Nope, a little bit off. But it got close. It got close. All right, moving on. The Fed, so they decided to hold rates. They decided to pause. They voted 10 to 2 to keep interest rates unchanged at 3.5 to 3.7%. Chair Powell tone was hawkish neutral, quote, noting that while the job market is, quote, sturdy, inflation remains sticky enough to prevent further cuts in the immediate future. Some folks were saying after the Fed spoke, after Powell spoke, that's probably the last interest rate cut that we're going to get from Powell. The next person who comes in, he'll probably be the next guy that potentially lowers rates. I think Powell's probably done. But we'll get more data. We'll be patient. We'll wait and see. Gold. This is actually getting pretty scary how much gold is running. I had some options in it, and I'm still in it long term. Not as much as I would like to be, but it was my top play for 2026. Meta was one of my top plays for 2026. NVIDIA, which seems like it's gaining steam, especially if China's allowing these H200 chips. That's going to be a catalyst for the stock. And then Uber, which I just lost some money in an option contract. It lost momentum. Uber is my last pick for the year. So that's some game for you if you watched this video so far. Definitely join the Patreon. I put that information in the Patreon. I put it in the paid version of the Patreon, but there's also a free version. I would love for everybody to like, share, and subscribe to this page. And if you like anything that you hear, head on over to the Patreon, get a lot of information just like this. I post these videos in there as well. And then if you want to get my best research, my highest conviction picks, and see what I'm doing real time with my investment portfolio, or just kind of bounce ideas off of each other. If you're a seasoned investor, I do have a paid version of that Patreon as well. If you don't have any information on the stock market, but you know that you want to get involved, now is a great time to jump in the Patreon. We have a whole year. In there, I also we talk about options contracts. So if you like options, definitely jump in. And then we do long-term investing, which is our base. This is our foundation, and we build a portfolio from scratch every year. And that portfolio right now is doing pretty well. It's actually, especially after Meta's run, we should be well above the S&P 500's return for 2026 so far. We've beat the S&P 500 past 2 years after I made that a goal of mine past 2 years. And I don't see why this year should be any different. So join the Patreon. But yeah, gold hits 5,300. The debasement trade is in full swing. Gold surged 4% today, eclipsing $5,300 an ounce, with the US dollar index DXY hitting a 5-year low. Investors are treating gold not just as a hedge, but as a primary risk-off currency. Just be mindful as well. The fear and greed index is in greed territory. So if you have some plays that are, you have some really big gains, now's probably the time to start taking some profit. You want to be greedy when others are fearful, but when everybody's greedy and it seems like everything's going up and things are going crazy, maybe it's the time for you to start taking a little bit of profits, taking some things on the side, putting some cash on the side for that inevitable dip, and then you can jump back in. Don't count out Trump for putting in some type of tweet or something to just tank the entire market. A lot of times it's just short term, but you always want to have cash on the side just in case he gives you a buying opportunity. We can look at gold real quick before we close out this episode. It was up today 0.44%. Is it up 5%? Oh, it's up $5. It's up $1.50 in the after hours, hitting a new all-time high again. Oh, just kidding, guys. That was Google. This looks a lot better. So gold is up today, up $18 today, up 3.88%. It's up $9 in after hours, just under 2% in after hours, and we are at an all-time high in the after hours. It's absolutely crazy how gold just keeps running and running and running and running and running. Absolutely crazy. Micron, another one, keeps running and running and running and running. This company's up 52% year to date. Crazy. All right, moving on to Microsoft. I told you we were talking about Microsoft a little bit. It dips despite earnings beat. And so this is a quote, sell the news event. Microsoft shares fell 7% after hours despite beating revenue and profit estimates. Investors were spooked by slowing growth in Azure Cloud and concerns that its AI backlog is concentrated in too few customers. I think with all of the issues that's going on with OpenAI and whether or not they are operating efficiently and what's going to happen with this lawsuit from Elon Musk, Microsoft is going through it. Since I've been following the stock market heavy, I don't think Microsoft's ever been in a route like this outside of the first parts of the pandemic. And then to close it out, Amazon's largest layoff in history. Amazon announced it's cutting 16,000 workers, its largest headcount reduction ever. The move is part of a quote hard pivot end quote to prioritize AI efficiencies over its traditional retail logistics headcount. The stock slipped just under 1% as the market weighs short-term severance costs against long-term margins. This might be Amazon's one of my favorite stocks. They did, I believe, send out an email prematurely telling people that they were laying folks off before they actually had a formal conversation or formal way to go about it. So that was a little rocky. I think that came out either this morning or late last night or something. So that is the top five stories of the day. Like I said, Tesla reported earnings today too. I think they was much better than expected, but only up 1% in the after hours for those of you who are Tesla fans. Google really bounced in after hours. I wasn't really understanding why, but it looked like it tapered back down, but it's at a new all-time high again, basically right there or just above it now. We talked about gold and Amazon. TSM had a good day, up 1%. SMH with NVIDIA doing well and TSM doing well had a good day. CoreWeave has had a good week, but pared back a little bit today. Corning Incorporated, which is a company that provides the glass for companies like Apple, they've had a good week this week, but shares fell a little bit today. It looks like there's a little bit of profit taking off of a big run. We talked about S&P 500 and the NASDAQ already. Vertiv Holdings, if you like NVIDIA, consider looking at Vertiv Holdings. They are a supplier for data centers, and they have liquid cooling that cools down the chips and allows them to work efficiently. We talked about Meta, NVIDIA. I think NVIDIA has a momentum again, so I'll look for it staying above like this 190. This 190 area is typically you see that is a supply zone. Hits 190, sells off. Then we got the bounce to all-time high here in November. Then that sold off. Got back to 200, sold off pretty strong until mid-December. Then got back to 190 again, and then kind of slowly consolidated and sold off again. But with those H200 chips, I think we might hit back to that 200 pretty soon here. So keep your eye on NVIDIA. MP Materials. So this really pissed me off. It's at 58.50 right now. I have an options contract in here and I have long shares. Not a lot of long shares, and option contracts is enough to make me pissed if this happened. But it sounds like the Trump administration MP Materials is a rare earth, is a company that specializes in rare earths. And those are very important for artificial intelligence. Those rare earths are what powers artificial intelligence. We need those rare earths. China has a chokehold on these rare earth minerals and be able to mine them and produce them and create these magnets that need in a lot of our electronics. And the government decided to invest in MP Materials, and another company recently, USAR is the ticker symbol, US Rare Earths. That stock went crazy earlier this week, tapered off a little bit today. But the reason why MP Materials is down right now is because Trump administration, I guess, loosely promised MP Materials a price floor on these materials, and I guess that wasn't the case. And so the stock is reacting because of that. So if this, I have this contract out for a year, but 58.50 was my hard stop. So if it closes below 58.50 tomorrow, I might just close it out and find another play to go really hard in instead. But 13 down 13%, down 13% after hours definitely caught my attention. Again, long shares, I don't have a lot. It's in my smaller portfolio, but the options is definitely going to sting. But that's pretty much it for today's episode. If you liked what you hear today, definitely hit the like button. I would most appreciate that. Make sure you share with your friends and family. Make sure you join that Patreon. Follow me on socials. And I will see you guys in the next one.